Oh, there we go. Hello, welcome, and sorry. We got a bunch of these in the chat right now. Hello, Winkamen and Ilsting Diggin. Happy Friday, everybody, from the Maple Bitcoin Boys. It is another Friday live stream. I'm Jor. These are my two good buddies, Rajat, Forrest. All the boys are back today, and it is an absolute pleasure to be with you boys and everybody in the chat today. So we're going to be talking about a couple different topics today. I would say overall sentiment in Bitcoin is pretty low, but we're going to try to steer away from that. I think there's enough people talking about the doom and glooms in Bitcoin right now. So we're going to talk about the flip side of that, the opportunities.
You know how crazy it is that the sentiment is low and Bitcoin's at 100,000. It's mind blowing. Like I remember when it was going towards 100,000, people were staying up in the middle of the night, and it was 99,000. They're waiting for it, and it didn't hit 100,000. People there was so much excitement when it did hit 100,000, and now we're just like, oh my god, Bitcoin's at 100,000.
It wasn't that long ago either. Not like it was 10 years ago.
I think we might have spoken about this before. One day we're going to crash to 100K.
Yeah.
It's basically what's happened. I feel like this week. And it kind of also seems almost programmatic at this time. Like it was October 10th, I believe, that big wipeout, the 19 billion in the crypto market liquidation event. It was only a month ago. So it's like the first week of every new month, we see this like massive crash in Bitcoin. I don't know. Might be something there.
What do you think, Rajat? Rajat's a little bit under the weather today, so we're going to be, we can kind of hear it in his voice, but he's all right. Hey, Rajat?
I'm okay. I'm good. It's crazy though that people, when it was going to 100K, people were so excited, just like you guys said before. They were so excited, and now they're just feeling like, oh, everything is gone. All of our wealth has disappeared. But I mean, the only reason why you would do that is back to the topic of this video, if you took on leverage, but you didn't do it right.
Yeah.
Like there was a guy who, I replied to yesterday. He was saying how he lost 80% of his wealth because of this crash. And I told him, just buy Bitcoin. That's all you have to do. You don't have to do anything else. Everything else is a scam. Everything else is a distraction. Just buy Bitcoin. You don't have to do anything else. I told him this. I messaged it to him on his post, and he's like, "No, at this point, that's not what I'm meant. That's not what I want to do." It was crazy.
Just because he wants to speculate on things instead, or what?
He wants to speculate. Yeah. So actually, let me show you the little thread. This is pretty funny. So, share my screen here, so you can see here. He said, lost 80% of my port this month, a full year of work gone just like that because of a few bad decisions. To those who've been here, how did you find your way back? Not asking for pity. It's good, whatever. And then I said, just stick to Bitcoin, use minimal leverage or avoid it completely. That way you won't lose 80% of your wealth during mass liquidation events. Everyone has to go through the pain of losing money. The stupid people will try to leverage with shitcoins again in the next few months, Bitcoin only. And his response, it shocked me. Agree with Bitcoin for a long-term investment, but I'm more of a trader who likes to take risks at this moment. And I said, so you asked for advice, but don't want to take it. This will happen over and over again until you finally figure it out. Yep. And he said, the goal for me is to trade so I can stack more BTC over time, not to trade to zero myself. And I told him, create value, stack Bitcoin, repeat. That's all you have to do. You don't have to do anything else. He actually said he's not at the point in his life where he's willing to put in time to create, to build more skills or something. It was a really weird response.
Do you see that comment below that one?
Sorry, which one?
I don't know where it was. There's a really good comment right before the last one you showed there.
Look what he said. Sorry, but spending my time to build another skill to earn money at this point is just going to be a waste of time. Going to be time wasting for me personally. This guy's probably young, right? Yeah. You have shitcoins. What was the comment that you were talking about?
Well, think about this too for a second. Like, he's talking about trading, and you're talking about providing something of value in the world and getting Bitcoin in return and holding Bitcoin. Trading does not provide value to anything. It does not create value in the world. It is literally just moving assets back and forth between different people and hoping that it's like a PvP game. It's a player versus player game where you hope to win at the end. But you're providing nothing to the world by doing that.
And it's not a fair fight either. Like
Yeah.
for the traders, they're going against Wall Street. The crypto bros, they're going against people who have a lot of stake involved and can move it and dump it and pump it and without, without them caring too much about you. It's just one of those things. It just goes to show that there's really no shortcuts in Bitcoin. It's if I was 20 years old right now, I think the last thing I would be doing is trading shit coins. And that's the other part of it too, is like everybody has that same kind of mindset and they think that they're going to be the smart one who trades their way out of this and gets into Bitcoin. So if that's kind of everybody's mentality in the altcoin casino, everybody just wants Bitcoin. Why not just buy what everybody wants and get there before them?
But the thing is that if you're 20 years old right now, you'd probably be stupid and you'd be trading.
True.
Right?
Maybe. Yeah.
Because you're thinking, oh, by 30, life is over. I don't want to get to that point. That's how you're thinking at that age, right? Yeah, and then also on top of all of that that we were talking about, you're trading against algorithms which are way faster than you. And they'll scalp like a penny, 2 pennies if they need to.
Yeah, there's that, all the bots for sure that have way more information than you do. And I think the other thing too is like the platforms, like these people are talking crypto, they're probably having to go to something like Binance for like the most liquidity, a large centralized exchange, which has the data of all of the other individuals trading on their platform. Who's to say that Binance isn't using that data and trading against their own clients and just extracting value away from them, knowing exactly what they're doing and doing something based on all the data that they have that they might not share with everybody. I just think it's like, I think it's ridiculous to assume that an individual in these markets has any alpha ability to trade when you understand the players you're fighting against. It's like being a role play. It's like being in a role playing game and you're level 1 and level 1 Padawan or whatever, and you're fighting against like a 99 wizard mage, level 99 wizard mage. It's like that's what it's like. You just don't stand a chance in the end.
Yeah.
And that's why we just keep hearing the story over and over again. Over and over again. And it is one of those things, like, it's one thing to tweet about it, ask for advice, reply to it. But at the end of the day, people really just have to find out the hard way, I think. And the nice thing, I've actually heard this a couple times in the last few weeks, the people who have joined like the Maple Bitcoin community or different communities, it seems like they're able to skip that part. If they can kind of find the right video very early on in their journey and kind of skip that whole thing, and then they can find people that, who appear to know what they're talking about and who have been through that before, like it's priceless information. It really is. And having people like that kind of in your corner, I think, I wasted so much money myself in altcoins. And, if you're somebody who escaped that and just went straight to Bitcoin, you're kind of in a league of your own, honestly. And you should be pretty happy about that decision. You don't have to live through the misery like a bunch of people are right now.
I had a diversified portfolio of shitcoins before.
And they're all worth nothing now.
I sold them. I don't even know.
Yeah.
Probably worthless.
Well, that's the thing. I think the only ones that I have kicking around still are the ones that don't even make sense to move, because if it's $60 worth of Shiba Inu and it's going to cost me $30 to move it from Ethereum to this chain to the exchange, then they take a fee. It's like, I don't know, man. They're just gone. It's just gone.
And a lot of those have like swap minimums and things too, where it's like I would have to fund more into it to be able to extract all of it out. It's so crazy. It's just, yeah, it's better not to pay attention to any of that. It's better to just focus on Bitcoin. I mean, how terrible would it feel to be 80% down right now on your portfolio? Like that person should feel pretty bad. Like that would suck. That would really suck. And instead of just like realizing that they're constantly going to do this, they're never going to hit the moonshot, like the likelihood of them hitting the moonshot, and then having the ego to say, okay, I'm actually going to step away from this, because it's becomes that gambler mentality where, oh, I won, I can do this again. And it's like gamblers will say this: the worst thing that can happen when you go play poker for the first time or you hit the slot machines for the first time is that you win, and you win big. That's the worst thing that can happen, because now you think that's going to happen again, and you're just going to spend your whole life chasing that high again. So yeah, that person is receiving signals from the real world, 80% down, and they're ignoring those signals. Instead, they're saying, well, what else can I do in this exact? It's insanity, right? Doing the same thing over and over and expecting different results. That's what's happening here. Like, that person needs to take that signal in, reevaluate their entire concept of how they're going to preserve and gain wealth, and do it the way that is tried and true, which is stacking assets that outperform money debasement, and Bitcoin being the best one out of those.
Yeah. I saw a comment that was actually perfect for the topic that we want to talk about today. It's from Pipeline Podcast. He said, I found Anthony Pompliano's YouTube channel, and he was mentioning Lava BTC loans, and it works in California. So it works perfectly for what we wanted to discuss here today. Do you guys want to go into it?
Yeah, let's do that. Oh, right here.
Yeah.
Sorry, I couldn't find it.
That's okay. So he said that Lava is basically a new platform, I guess. What would you call it?
It's a custodial lending platform that LARPed as a non-custodial platform, lending platform for quite a long time. I heard about this months and months ago, and they were toting DLCs, which are discrete log contracts, which is a type of basically agreement that you can do I believe it's in a 2 out of 3 multisig with an oracle, a lender, and a borrower. And you can make an agreement that the oracle then dictates whether that agreement comes to fruition or not. So you can create a loan, and if you default on the loan, then the oracle closes it out and gives the proceeds to the lender, and brings in information from what Bitcoin's price is and stuff. It's still technically possible to create these things, and there's actually people will create like options contracts with DLCs, discrete log contracts. And this is the whole premise of what Lava was. It was supposed to be a self-custodial, because in that situation, you have one of the 2 out of 3 keys. An oracle has a key, and the partner or the lender will have a key as well.
What's an oracle?
An oracle is like a third party that only acts on information that it's supposed to have for the agreement. So if you create an option, or if you create what looks like an option contract in here, the oracle, you would make an agreement. You would say, if Bitcoin goes to 110,000, then you will sell it to me for 100,000. And an oracle will have the data. It will have that information, the agreement information, and then it will have the spot price from an exchange. And then if it hits 110, it will execute the contract, and it will sign with your key to buy the Bitcoin or whatever. I don't even remember the.
So it's kind of like a smart contract.
Yes. It is basically a Bitcoin. It's not a smart contract as far as I understand it, but it is a way to create sort of agreements and have a third party orchestrate part of the agreement.
Similar idea, though.
Yeah, similar idea. Yeah.
I was going to say, from what I understand, it's like a third party that has information that's widely trusted or something like that.
Yeah, exactly.
Right.
Exactly. Yeah, widely trusted. So the information that I said was the agreement, like that would be the sort of the contract part, and then it has the widely agreed upon price would be maybe one of the inputs, or something else from the market. So people can create betting markets with DLCs, but you can also create loan agreements with DLCs, and that's what Lava was supposed to do. And in fact, they did that for a while. It was in production, and that, like, the custodial aspect of Bitcoin lending is, I would say, the biggest issue. I would say it's the biggest issue. People will talk about lending rates and all this kind of stuff, but they maybe don't understand the fact that when you give up custody of your Bitcoin, that's a huge value proposition of Bitcoin that you're now don't have, right? You now have somebody else owns your Bitcoin, right? And possession is 9/10 of the law, and there's all of that, right? So basically what Lava did, which is fairly deceitful in my estimation, there's a few things they did that was deceitful. One of them is that they just basically moved people's funds from DLCs because they were the oracle and they were the lender, or in some cases they were, so they would have like sort of a liquidity pool so they could lend, and basically subsidize their lending product by their own contracts or their own USDC that they would lend out. And then essentially they moved that to a custodial platform, and there was some sort of thing that was sort of vague about this. Like it was like an upgrade to the vault system that basically you would just have to do. And then that turned it into a fully custodial lending platform, which is what it is today. So it's the same as Ledin or Strike. It's a fully custodial lending platform as of today. The other deceitful thing they have is that they charge, it's like a 5% interest loan, but then there's an initiation for the loan that's 2% of the total. And then that's only for either short or long. I can't remember. But then one of the others is actually 7% plus the 2. So it's not really like they advertise 5%, but it's actually, there's all these like sort of hidden fees within there. I don't know. There's just a lot of things there that are not great, I would say, with Lava.
Yeah, I've been seeing posts on X about this, just going into it, and I feel like just reading these posts kind of, it's I don't know what they're doing. I don't quite understand. I think you explained it a little bit better, Forrest, with the DLCs. I don't quite understand. Like that's not the issue for me. The issue for me it isn't custodial versus non-custodial. It's that they lied.
Yeah,
and
totally.
they didn't seem to tell people in advance, and people are complaining a lot. Like there's this post here. I'll share the link in the chat so you guys can read it, I guess. But then there's another one. So if in this one we'll go into this. So I'm usually not one who shares much, but recent news about Lava becoming apparently a custodial solution while claiming DLCs. So like you said, DLCs have security flaws made me speak out. I want to share my opinion. So he went through. He gave a bunch of different insights, and then there's another one. I think this one's actually a little bit more. So he's actually responding to the creator of Lava. So he said, I have an active loan. I used to have contracts updating, but please wait. Type loading screens. There was a forced migration process a few weeks ago. There are forced updates in app black screen, making it unusable until you update. I no longer have the contracts updating screen. You now say you don't use DLCs, and there's a bunch of corporate speak about trust and audits or something. Shezen, did you make me install an update where my own app ended my DLC-based loan agreement and to enter this new agreement? So this seems really sketch.
Incredibly sketchy. The other thing I saw too, I saw this post about how somebody has traced the wallet for Lava because now it is just a custodial thing, and it's like one large single sig, and it keeps moving Bitcoin back and forth between a Kraken wallet. It's like,
oh, I think I found it. Was this
what is going on there?
I just Googled it. Here, check this out. Was this the post that you saw?
Yes.
Oh, yeah. So it seems like they moved all the Bitcoin into one address. I just saw this. I was searching for Lava and I just found it. Wow.
Is it a single sig or is it a multi-sig? Was I wrong about that?
I don't know.
Okay.
Doesn't show it. Probably a single sig.
It looks like it. Usually it says on mempool if it's a 2 out of 3.
Oh, I can actually pull it up. Yeah, it's a single. It would say here, no?
It usually says next to the inputs and outputs.
Yeah.
That's where I've seen it on mempool.
Yeah, it would say multi-sig in brackets 2 of 3 or something like that.
Yeah. So the problem here isn't custodial versus non-custodial. That's fine. Ledin is custodial, and I've used them. I've looked at them. Strike is custodial. The point here is that when you lie, you lose your reputation. And how do we know that you're not lying about something else?
Yeah, and I would say custodial, the custodial situation matters in this case because if you have your Bitcoin custody with somebody else, that's a trust agreement. If you have it in self-custody, you're trusting yourself. There's no additional trust. If you learn the skill of self-custody, you have your keys backed up and everything. If you have it with somebody else, that's 100% trust because you're trusting that they don't do something with it. You're trusting that they don't sell it or that they're not fraudulent and all of that. So when anything fishy like this happens, the fact that they pushed updates and made basically the old UX not work without updating is really fishy behavior. And if you're in a lending agreement that's based on trust, and the custodian is doing something that's not trustworthy, then it should be something you completely avoid, like 100% avoid. Just not worth messing around with. Like, it's not messing around with to get 1 or 2% lower, because you don't know what the hell's going on back there. Like, you're risking your entire loan with something like that. So trust is incredibly important. And I think that's why Ledn has succeeded where others have failed. Celsius and BlockFi and these other transparency, right? They do proof of reserves, which amplifies a level of trust. They've outlasted multiple bear markets, and the massive liquidation event in October that we talked about, they supposedly had 0 liquidations happen.
That's the key too, right? Like, I would say that's the number one thing you should be looking for when you're thinking about this kind of stuff, is the liquidations and actually making it through a bear market, right? Because everything's easy when it's a bull run. If any business, any product, any lending, whatever it may be, when everything's going up, you don't really see, what's under the wave essentially. And then all of a sudden the tide goes back out and you can see who's wearing what and what's left underneath there. So I think that just that alone, having survived a bear market where most other lending services failed at that time, is a pretty good sign of strength, I would say anyways, for somebody who would be a potential customer.
Oh yeah. Yeah. And if you're gonna do a lending platform, there's so much value in being able to trust the platform and the custodian. And that value is way more than 1 or 2% on your interest rate.
Yeah, and I think it's important too. I think just kind of acknowledge the fact that there are many different services out there. Many of them have not been through a bear market yet. And when you're thinking about this kind of stuff, there's so many factors to consider, of course. But just, reputation, I think, is the biggest one, because it's one of those things where even if you would have had, like, let's just use last week as an example, or when was it? You said October 10th when the big crash was?
I believe so, yeah.
I feel like even if you would have bought Bitcoin or took a loan against your Bitcoin when it was like 120K and it dropped to what it did, as low as it did, you still wouldn't have been liquidated, because Ledn has a 50% LTV. So essentially, if you have $10,000 worth of Bitcoin, you get a loan for $5,000. And so the LTV there, like, they wouldn't have even come close to being liquidated there, right? Even from the top to where we are today, anybody in Ledn, they wouldn't have been liquidated. There's just no chance.
No, it didn't drop low enough. I mean, the LTV would have pushed up. I would have to do the calculation to figure out what it would reach to, but I don't believe it would get to 80.
I don't think so either. It couldn't have, because I remember when it was like $100,000 or higher than that, we figured out it would have to drop to like 60K to get liquidated.
Yeah,
60 or 70K.
Yeah, I think you're right there. And I mean, this is the thing, right? Like, I've talked about this a lot, and I've had a couple videos do really well about loaning and borrowing against your Bitcoin and stuff. And you just, when you're securitizing an asset like this, you have so many risks. One of them is the custodian risk. The other one is that LTV risk. And you just need to over collateralize your loans, because this is a volatile asset. It's possible that there's also a lot of power going to a lot of institutions which suppress prices, manipulate prices. There's already that going on with leverage. If a flash crash happens, that could punch people right in the mouth with their liquidation, their LTVs. You just want to be over collateralized with these things. That's huge for this, in my opinion.
What you got here, Rajat?
So if actually, this is something pretty cool. I saw this. If you borrow, so Bitcoin's basically been doing like this staircase.
Mm-hmm.
It's going from 25 to 50 to 75 to 100. Now it seems like support is at 100. Who knows? Maybe it'll drop a little bit. But if this is what continues, and if you take a loan against your Bitcoin, you're pretty safe.
Yeah.
Right. And Bitcoin has to fall. So I think if you're planning to take a loan against your Bitcoin, now is probably the right time, because we've dropped 25%. If you get liquidated, it would have to drop. So let's say you have
Yeah, let's walk through like an actual example of somebody like
Yeah.
wanting to get, $10,000 right now to get more Bitcoin. Like, can we walk through like that exact example?
Yeah. Yeah. Okay. So let's say, for example, if you use 0.2 Bitcoin as collateral, or 0.2. So 0.2 Bitcoin as collateral, current price of Bitcoin is about 103, 104K. Is
Yep.
it up that
Yep.
much? 104K? Wow. Okay. So if you wanted to take 103, no, if you wanted to take a 10K, $10,000 worth of Bitcoin as a loan, so $10,000 worth of Bitcoin as a loan, you use 0.2 Bitcoin as collateral, $20,500 worth. Your LTV is at 48.63%. Bitcoin would have to drop to 62,500 for you to get liquidated. So it'd have to drop 37.5% for you to get liquidated.
And so maybe just also explain what would happen in the next 6 months in this exact scenario if Bitcoin went from 100 to 150. Like, what would that look like in your new loan?
Yeah. Okay. So let me just copy this here. I'll paste this here. So if Bitcoin goes to 150K, if it goes to 150K, it means that your LTV has dropped. So LTV is your loan divided by your collateral. So your loan divided by your collateral has dropped to 33.3%. And you could technically take on, depending on which lender you're with, some lenders just let you take on more loans if your LTV is under 50%, but others have like certain conditions. So let's say with Ledin, I think you have to have it drop to 25%.
30.
And then
It's
is it 30? Okay.
it's anything below 30. So 30
Anything
is
below
when
30, okay.
when you can start to withdraw. Yeah.
So at 30%, does that mean, so let's say you can withdraw, you can use that collateral to borrow more fiat, right?
Yes, out of the same loan. Yeah.
Okay. So what that would mean is, let's say it goes to 150K, and let's say you can take on more loans. Let's say you're with Strike. For Strike, I think it's more like it just keeps going. Like you can take more loans whenever you want to, as long as your LTV is below 50%. But just for this example, I don't know the case here, but let's say for this example, you want to bring it back up to 50%. You can now borrow another $5,000. So you can borrow another $5,000 against your collateral.
Same
And
collateral. Yeah.
Same
You don't
collateral.
even,
Yeah.
you don't even have to add anything. You can just extract more fiat
Yes.
value out of it.
But then
Yes.
if Bitcoin drops back to 100, then you're going to start getting closer to your liquidation, right? Because you're at
Yes.
75% then.
Yeah. So if it goes based on this trend, let's say it does drop, I think it would drop to like 125K. So what's been happening, it goes up 25% or 25,000, and then it drops it goes up 50,000 from the bottom, then it drops 25,000. And it goes up another 50,000, drops 25,000. Goes up another 50,000. So let's say, for example, it goes to 150K, then it drops to 125K. And then that's the support at the bottom. I mean, it seems like that's exactly what's happening, because the top here was around 125K. So let's say it goes back up, goes to 150K, then it drops back down to 125K. Your LTV has dropped to, or it's gone to 60%.
It's pretty interesting. I mean, yeah, it looks like clearly it's been happening in that way.
Yeah.
Eventually it won't, but will it go to the upside or to the downside? It's
Yeah.
it's not just going to climb like that forever.
That's true. Yeah. No, but
Yeah.
it could. That's the thing. It
Yeah.
could, because of the new players that are in the market. They literally have unlimited money.
Yeah, I mean, it could, but it also could not, right? Like everything's probabilistic.
Yeah.
And it has, which is interesting, but that information itself creates a market that might change based on that information if everybody expects that, right?
Right.
If everybody expects this, and then everybody takes out these loans, and then they're like, okay, well, it's going to 150, but then it'll only go down to 125, so I can extract more value out of it. But then your LTV goes up to 75. You start to maybe get a little bit stressed there, right? So
Yeah.
I don't know. Again, I've made a lot of videos about loans, but I think it's a really good idea to be heavily over collateralized on this,
Yes.
even though Bitcoin has had lower volatility to the downside. I still
Agreed.
think it's incredibly a good idea to have a low LTV.
So keep your loan at that 10K, that initial 10K, until you go to like 20% LTV.
Yeah.
Yeah,
Is that
exactly.
what you say?
I would say that. Like, these are risks. You know, you need to manage your risks. So one way you manage your risk is by not doing your whole stack into a leverage like this. One way is by using the most trusted platform. And the other way is by over collateralizing, right? And you're mitigating every single one of these risks along this experience if you are trying to borrow against your Bitcoin, right?
Yeah,
I would say that there's a couple different. Sorry, go ahead, Rajat.
Oh, I was gonna say, if you're gonna take a loan, like, you should be very smart with it. We don't know where Bitcoin is gonna go in the short term. We have no idea. We don't want you to get liquidated. So if you can, like, my recommendation is take a smaller percentage of your Bitcoin as collateral, and then if you can, pay back the loan and decrease your LTV. But at a point, I think there's a point where if you get your LTV low enough, then you probably won't get liquidated.
Yes,
right?
Definitely. Because there's a price in Bitcoin's history, if you look back, where Bitcoin never goes back to that price.
Yeah,
never. So if somebody created one of these loans for themselves a long time ago, they're not worried at all. It doesn't matter at all to them, right? Because the liquidation price is so low.
And that's what people should be thinking about, like, as a long-term thing, right?
Yeah, and to me, if you end up timing this right, if you're over collateralized to weigh out any downturns, there's a concept of never paying this loan back, right? I'm just allowing the Bitcoin to grow in value compared to the loan that is increasing in value as well based on the interest rate, and dollars getting easier and easier to come by, and maybe 10, 20, 30, 50 years down the line, even though the dollar amount of the loan has increased by this 10, 12%, whatever it ends up being per year, it ends up being meaningless because dollars are basically worthless at that point. But yeah, buy, borrow, die. Exactly.
Actually, I want to do a quick calculation for this. So let's say your interest rate is 12.4%. For 20 years, you borrow that Bitcoin, or you borrow that fiat. So you borrow for 20 years. Your loan has gone from $10,000 to $103,000. Now that's probably really scary to people, and they're probably thinking, "Oh no, I don't want that. My loan has increased so much. I'm paying $90,000 in interest. I don't want that." But you also have to consider that your Bitcoin has increased in value. So let's say, what do you guys think Bitcoin has what's a conservative growth rate for Bitcoin?
I would say 20 or 25%.
Yeah, I have a mortgage thing that I want to share here right away, and I use 20% just to be conservative for it.
Let's go 20%. So your Bitcoin has grown to $3.9 million.
Well, that's one Bitcoin. So
yeah, that's one. Yeah, you're right.
Your collateral would be that.
That's correct. Yes. So you have 0.2 Bitcoin. Your collateral has grown to 788K, but your LTV has dropped.
Yeah. That's the key. So that for the starting loan, right? Your Bitcoin collateral is worth twice as much as the loan. Now your Bitcoin collateral is worth almost 8 times the loan.
8 times.
So it's relative to each other, right? So yeah, I mean, what an incredible trade right there. And that's the power of really smart long-term duration leverage. Yeah. That's the whole thesis of MicroStrategy, which is why I remain bullish, even though it's been like the worst time as a MicroStrategy holder, because this is exactly the trade they're doing. They're selling equity preferreds that pay a certain interest rate, and they're using the proceeds from that sale to buy Bitcoin. I would rather hold Bitcoin than their preferreds, and that's the same bet they're making. But anyway.
Yeah, it's the strategy that rich people use with other assets, except Bitcoin's totally different than this. And it is one of those things where, because it's so different and so kind of revolutionary in a way, and so different outside of the paradigm that we're all used to, there's tremendous upside here. Tremendous. Like that 788,000 could be 7.8 million for all we know in 20 years from now. Like literally, it could be. Something could happen and it might go to 0 too. But kind of what I always go back to is, like, if the upside's that high and the risk is it going to zero, like the risk reward there are way out, in my opinion. Like the reward potential for this is significantly higher than the worst case scenario with this, right? Especially if you're only using 5 or 10% of your stack. But at that point, we would have to assume that Bitcoin's gone to zero, something happened. But it's like, you don't die. They don't take you in front of the whole town and hang you anymore. Like, you just, go back to the life that you had before with what you had before. You just start again. Like, nobody dies here in this situation. So it's like, why wouldn't you at least try? Why wouldn't you? This strategy has been proven effective for decades now, in the sense of never selling your assets, only lending against them to acquire more assets. That's essentially the rich dad, poor dad strategy, where you let equity build up in a house, you pull that equity out, you buy another house, both equities go up, you take the equity out, you buy another house. It's the exact same concept, except I would argue that it's actually much less risky too, because there's less factors involved. There's no neighborhoods that could go to shit. There's no tenants involved. There's no new roof you need to put on it. There's no, on and on and on.
And one thing I'll just say here is, to be the devil's advocate, is one of the values of Bitcoin is the fact of self-custody, of being able to hold it yourself. And you give that up by doing these loan agreements. Yep. Whereas if you do this with stocks or even with real estate, you don't really own those assets. Like, they can always be confiscated from you to some respect. Whereas Bitcoin in self-custody has this power of self-custody that no other asset, in my opinion, really has. So you are giving that up by doing this loan agreement. And that's why I would only do a small portion of my stack. And I have a loan with this, and it's a very small portion of my stack because of how much I value the concept and the idea of self-custody. So that is something that should be known, and a real differentiator for a Bitcoin-backed loan compared to other asset-backed loans, in my opinion.
Yeah, this is one of the things that you have to understand. So any Bitcoin that you give to your lender is at risk.
Yep.
Yes.
It could be taken from you, right? And you may never get it back. So there's multiple reasons for why that could happen. So number one, let's say the U.S. government says we can't allow people to have their Bitcoin back. We need it for our strategic purposes. I don't think that's going to happen, but it could. Nobody can stop that from happening. The second one would be, let's say your lender is actually let's say, for example, you're like Ledin, for example. Let's say they're actually like some crazy gamblers in the background, and they're borrowing your Bitcoin. They're borrowing against your Bitcoin,
like FTX was.
Right. And you can't prove that that's not going to happen, right? So any Bitcoin that you give them, that's at risk. You have to understand that. And then on top of that, if Bitcoin's price does fall, let's say right now, I think if institutional investors weren't in this, then we would probably be a lot lower, right? Because there's a shitload of Bitcoin just being sold into the market. So I think that's one of the things. If Bitcoin's price does fall unexpectedly, and if there's like a wick down 80, 90%, your stack is going to be liquidated. So that's something you have to remember.
Yeah, exactly. And there's going to be a lot of players, like even JP Morgan talked about just recently, talking about how they're going to offer Bitcoin backed borrowing and lending products for their clients at some point. These people, there's a reason that these people want to do that. One of them is that they can make, the spread, right? They can have an over collateralized loan and make lending really easy, and have that spread. The other concept is that some people doing this are not going to be responsible. They're going to under collateralize it. They're going to not pay attention to it. And then JP Morgan is just going to get access to that at incredible rates, because they're going to be able to liquidate you in some crazy tail risk event flash crash, right? I would just say there's a reason that these players are coming in, and it's because they want your Bitcoin, and you need to re-listen to this, go watch the videos all of us have made on this subject, do your research, protect yourself figure out every risk of this, many we've talked about, and protect yourself at every single point if you're going to proceed.
Yeah.
We did a really good video on this in the Maple community, actually.
Oh yeah, that's true. That's probably our best one, I would say. That's
only on Maple Bitcoin School too. We have like 6, 7, 8 videos in there that we've done, about an hour-long discussions on lending against Bitcoin, on how to protect your private keys, on the most optimal way to buy Bitcoin. And so those are all in the Bitcoin School or Maple Bitcoin School. Do you guys have the link to that? We'll just throw in the chat right now while we're talking about it, in case anybody wants to watch it. I was going to say final thoughts, but do you guys have any final thoughts on it before we kind of wrap things up here?
6, 7.
You
You
can.
said
Oh,
6, 7.
One thing that I wanted to say is that you could use this to buy more Bitcoin. You're basically taking a leveraged position on Bitcoin. But what you could do is you could actually turn that around, and you can add the Bitcoin that you buy into your lender's platform as collateral, and you can just automatically decrease decrease your LTV immediately. So actually, let's take a look at that as an example here. I think that's pretty cool.
And Ledn actually has a specific loan product that just does that for you right away and adds it as collateral.
Which is
to me,
sick.
It's pretty awesome. I haven't actually done that one, and I'm thinking about doing a small.
It's not available in Canada.
Oh, dang. Well,
Yeah,
never mind.
B2X, right? I think that's what it's called.
B2X, yeah.
Yeah. So let's say you get 0.2 Bitcoin as collateral. You take on a $10,000 loan. Let's say this is equivalent to 0.1 Bitcoin. So what you would do is you take 0.2 Bitcoin as collateral, or you use 0.2 Bitcoin as collateral. You give it to them. You get a loan for $10,000 worth of fiat. You buy 0.1 Bitcoin. You add that to your collateral. So now you have 0.3 Bitcoin as collateral. Your LTV has automatically dropped to 32%. And now Bitcoin's price has to fall to 41K for you to get liquidated. That's pretty good.
That's really good.
That's the safest way to do it, I would say, right?
Yeah.
And then this is how you get more Bitcoin too.
And then the way that I would think about that is the Bitcoin that you've acquired is now encumbered by the interest rate. So any increase in that Bitcoin's value, you could minus the cost of capital, of the cost of the interest rate. So you basically have Bitcoin price increase minus the 10-12% that you're paying. That's one way to conceptualize this, because it's not pure Bitcoin, right? It has a cost, an interest rate cost to it.
Yep. Right.
Yeah. But after at a certain interest rate, it's worth it.
Yes.
Like if you can get let's say you can get this loan instead of like Ledn's at 13%. Let's say you could get it at 8% or 9%, 10%. You're pretty good.
Essentially, what you're doing here is you're betting. This is a bet saying that you think that Bitcoin's going to outperform the interest rate on the loan.
Exactly.
Yeah.
So you think that Bitcoin's going to, let's say you set this up. I know it's kind of year to year, but you can roll them over if I'm not mistaken.
Yes.
So if you kind of take like a 5-year approach with this and you say, okay, over the next 5 years, do I think Bitcoin's going to outperform 12% in the case of Ledn? And if the answer to that is yes, I mean, as long as you're paying attention to your LTV and if you kind of understand what it is and, you're checking on it, you're probably going to win the trade. If you believe that Bitcoin's going to outperform 12% compound annual growth rate for the next 5 years, which I'm thinking most people here would be pretty disappointed if it didn't. So that's essentially what people are doing.
Yep.
Go ahead.
No. I didn't have anything to add.
I was going to say, you can actually, so I have another calculator here where you can do exactly the same thing.
Okay, so this is with paying monthly interest towards it, and then you have Bitcoin's growth rate as well.
So let's say you had, let's say you were planning to DCA $500 per month. Instead of DCAing it, you could borrow, and then you can pay back the loan with that $500 per month.
Right. Yeah. And bring all that purchasing power to the present.
Yes. Yeah. Yes. Oh, you can see here. So you would have bought $10,000 worth at payoff. So in 22 months. So if you just scroll down here, you can see month 23, your loan is paid off. After 22 months, we'll go 23 months. So after 23 months, your Bitcoin is worth $15,337. You've bought almost 10 million Satoshis. And at that point, let's see here. At that point, one Bitcoin should be worth something like 100 or 153K or so.
So your cost for this was 11,500, and the value is now 15,300.
Yeah.
Yeah. Okay. And that's with a high interest rate. 12% is high. It's high.
If you go 8%, let's go 22 months. Oh, 21 months. So if you have 8% interest rate, the Bitcoin would be worth 17,007 or 14,777, you would have paid 10,500 or so.
Right.
10,700.
Yeah. I mean, it all makes sense. It's just yeah, so there's all the risks we talked about, and then there's short-term volatility risk where you have to have these loan terms either be able to be refinanced or long-term enough that you're able to smooth out Bitcoin's price action. Think something like the 50-day moving average of Bitcoin's price as opposed to the daily or weekly candles. Because over the long term, Bitcoin's easily going to annually outperform 12% a year, but it isn't going to do that every single year. If there's a bear market, if the 4-year cycles continue or whatever, there's going to be one year where if you only do this for a year, you're going to get screwed. If again, there's a lot of ifs there, but if the bear market happens, if you take out this loan specifically on that year, and you're not able to refinance it, you're not able to smooth out that volatility and see the upside of Bitcoin, then that's not the move.
Yeah, I was just going to say, kind of round things out here. If you look at those spreadsheets, I think that the numbers that we use there would be kind of applicable for the average person. One main point I think we should really drive home is that we don't recommend doing this with like more than 10% of your stack. I think that should be your upper threshold. And I think if you kind of keep that in mind, using those numbers that we mentioned there, you would have to have a pretty substantial stack at this point. Let's say maybe 2 Bitcoin for this to even make sense. Because if you're playing with less than that, you might get $500 loan or $1,000 loan. At that point, it's just like almost a waste of time, I would say anyways. It's not really worth the risk or the time you put into it. So in that sense, I think for somebody watching this today, unless you have like 2 or 3 Bitcoin, I don't think that this strategy makes a whole lot of sense. But on the flip side of that, if you are somebody who's here today, if you just give it a little bit of time, let's say 4 or 5 years, and you reconfigure these numbers, it'll match up probably to what you have for a stack now. If you have like half a Bitcoin or a quarter of a Bitcoin, I would say just wait a little while before you do this, because if you wait, everything's going to look better for you. You're going to be able to take on more. You might get less. Bitcoin's price might be higher, but it's all relative, right? And so that would be kind of my suggestion is like, if you're somebody with a very small stack, or I shouldn't say small, but not a substantial stack. If you're still like really trying to accumulate, I don't think this is the best strategy for you. I think that this would be the equivalent of somebody who has 3 or 4 rental houses and they want to do this to buy another rental house. Until you get to that point, it just doesn't really make sense. You could get caught up. The interest rate might, screw you over if you're not thinking long-term enough with this. I just wouldn't recommend it for anybody who doesn't have like a decent stack of Bitcoin already. And then you kind of run into the question of like, well, if I already have that Bitcoin, do I really want to take on unnecessary risk to just get more Bitcoin? But that's how wealthy people think, is that they want a 5th rental house. They want a 6th rental house. So that would just be the way that my final thoughts on it.
Yeah, it's possible if your stack is too small, that the basically the juice isn't worth the squeeze, that your time and effort and risk is best put elsewhere. But it's all personal finance. So if you feel like you want to try it, get the knowledge of how to do it and all that kind of stuff, there is benefit to that as well, even in a small amount, because you also have to figure out like, okay, how do I pay the loan off? Well, you got to do a wire transfer, and there's fees associated with that. If you want to pay with fiat to close the loan out, or you use the Bitcoin to close the loan out, but then there's tax implications. So there's going to be little nuance type things that you run into with these scenarios that testing the waters will help you with, so that when you are ready to do it in a more meaningful way, that you are ready to do it. That's what I would say. That's
a good idea. Yep. Yeah. Kind of like a test transaction, sending a small amount first.
Yeah. That's what I did. I started with a $500 loan on Ledin just to see how it works. And I'm like super impressed with it. So yeah.
A couple different things here, boys. We got a fat zap from Alex here, 3,690 sats to that QR code right beside Rajat's head there. So if you are enjoying the conversation today, if you're learning anything, that's the best way to do it, is to send it there. We also are on Zapstream today. We're on the Nostr. So we got a couple big zaps here. Josh sent in 8,888 sats. So thank you, Josh. Very generous of you. Cannon Zap 420. Nice. You said the boys are back. Matt FRL Zap 21. Plural Zap 21. And there's quite a few people over in the Nostr chat right now. So shout out to Zapstream.
Have you noticed a big uptick in your Nostr viewers since you've been streaming there more, Jor?
Yeah.
That's
Actually
awesome.
had more people watching on Nostr today than on Rumble. There's like 25 people on Rumble, and I think there's like 40 on Nostr for the show this morning.
Let's go, dude. It's the future, man. I got Zapstream working. I think I've done 2 streams now on Nostr. It's been awesome. A lot
It's
of Zaps,
amazing.
a lot of good people on there.
Even that, like if you think about how good Twitter is as like an app and everybody uses Twitter, I don't think they have anything quite like Zapstream in the sense where you can actually see if you open up your Nostr account, depending on which app you're using, like Primal or Amethyst or Nostr is another good one. But you can actually find streams directly on there, right at the top. It kind of scrolls across there for you.
That's the beauty of the decentralized protocol, man. It's with X, it would take a development team within that central organization to develop that, right? Whereas with Nostr, it's like individuals can just integrate Nostr into whatever platform they're building, and then it works all across the protocol.
It's incredible. So
Yeah.
big shout out. And we just got a couple more zaps. Josh zapped 6-7, 67 sats. And Chief White zapped 1,000 sats and said, great job. Thank you, Chief White.
Nice.
I wanted to, before we move on, actually, do you guys want to take a little bit of a breather here? Do you have any questions that have popped up that you saw? I know it's kind of hard to follow when you were in a conversation like that, but
We did have a super chat from now.
oh yeah,
we should
good
just
call.
bring that up. Took out a 12K loan, unsecured loan for the dip. Nice. Yeah, that's the other thing. Like we're talking about securing your Bitcoin for a loan. There are other options, character-based loans. Oftentimes they're fiat centric, so they will require that monthly payment, the minimum, and things like that. Depending on where you are, I mean, the States is insane. Like they want people to get in debt like crazy. So there's so much incentives for like balance transfers and things. Friend of the channel, Sonny, he bought like a crazy amount of Bitcoin when it was around like 50K, I believe it was, using
Like 1.5 Bitcoin.
Yeah, 1.5 Bitcoin using credit cards and just transferring the balance over and over. And he pays like an effective rate of basically 0 because of these promos, which is a crazy strategy, but has worked wonders for him.
Holy cow, what's going on YouTube right now? I might have got attacked by bots. Oh, I did. Somebody's telling me that Exavum is the next big thing. I got 15 comments on a video talking about Exavum. That's the newest bot crypto that we should be buying, boys. I see VHF's comment here telling us what to do. VHF, quit being so bossy, man. Said you guys should pick one channel instead of streaming on 3 different channels. I mean, you're not wrong. But the problem is we're actually doing it for people because they haven't subscribed to the Maple Bitcoin channel yet. That's why we're doing it. So if you haven't already, make sure you go over to the Maple Bitcoin YouTube channel. We do eventually want to just exclusively stream on Maple Bitcoin. We're just doing it on all 3 channels because we don't want to leave anybody out, essentially. So until everybody kind of migrates over there, where we're going to keep doing it on separate channels here. So you can kind of shortcut that if you want to and head over to our Maple Bitcoin YouTube where we post all the videos that we do together and we stream there every Friday. So at some point in the future, we'll be there, VHF.
Yeah.
It's hard to give up the views that come with streaming to all of our channels. When we have done that, right? We've streamed only to Maple Bitcoin. I think we tried that out a couple times, and it's just we get way less views because not everybody's over there yet.
Yep.
Yeah.
It takes time. People are slow.
Mm-hmm.
Another thing here too, while we're sharing links, in about 32 minutes from now, we're going to be doing the Maple Bitcoin happy hour. We've done about 15 weeks of this so far, I think, and they are awesome to be a part of. The numbers in the chat keep going up every week. Better and better questions are coming on. It's just a fun place to be. It's kind of like the after party of this live stream that we do. So, Rajat, do you want to bring up? Oh, you got it there. Should I bring it up? Yeah.
Yeah.
There you go.
This is the happy hours. The pre-recorded 15 of them.
Yeah, I mean, if you just if you just signed up as a member and strictly watched all the happy hours that we did, I think that would be, you'd get more value than you paid for. I'll just say that out of those happy hours. There's a lot of good questions there. And then plus you get access to all this exclusive content. We talked about the using Bitcoin as collateral. We did a full hour kind of breaking down scenarios of how to utilize your Bitcoin to get more of it. And of course, this stuff, to me, this is the most important stuff, is like, storing your Bitcoin, understanding Bitcoin, having that conviction, the proper techniques to buy Bitcoin that we use, and all this stuff. So this is all included. This is all exclusive for the Maple Bitcoin School community. It is amazing. We're getting more and more people every week. The number's going up, which is a good sign, I think. And so there, you can join, you can scan that, you can sign up. And I don't know, boys, we got a seven day free trial in there, but we might be changing that soon. So for now, you can hop in there for 7 days. You can try it out, experiment, see if it makes sense for you. If not, you can just cancel and not pay a dime, but pretty low risk. So,
yeah, I mean, yeah, we might get rid of that. So now's the chance to use that trial, because we've had some scammers come in, take advantage of that trial, and try to message people, but they're pretty bad at it. But yeah,
yeah, they are. They're horrible.
The Rajat one is telling me, "Oh, how is your trades doing?" There's like this fake Rajat one, and I'm like, I told them I sold all my Bitcoin and bought XRP, and then it just like sent me another like pre-recorded message that had nothing to do with it. I was like,
Canned messages.
yeah,
It's pretty funny.
So there you go. That's
somebody today said, "Oh, join our Discord."
Yeah,
we're not going to send you to a Discord.
No,
this is the group.
This is it.
I mean, that's why it's kind of unique in a way, because it's a place for us to share all the exclusive content that we feel is very valuable to anybody going through their Bitcoin journey right now. And but the other thing is that it's an actual community in there. So it's probably the closest thing to like a Patreon kind of thing. So if you want to support the people that you're watching, it's a good way to do it. But it actually has a very interactive like community in there. So you can make a post, you can post a video, you can ask a question. And there's 170 Bitcoiners from around the world in there. So there's a good chance that somebody has that knowledge that you're looking for, even if it's not Rajat Forrest or myself. So it's insanely valuable. We are going to be raising the price in the future. And the nice thing about school is that whatever you join at, that's kind of like your locked in rate forever. So let's say you joined at $27 or whatever it is, and we bumped it up to 50, you would still be paying the 27. So that's why it kind of makes sense to get in to join as a member early on, because you kind of lock in that rate forever, and you lock in, your reputation. You have more proof of work in there, I guess I'm saying.
Something that was cool here. We made an intro video here, and in the intro video, there were 136 members.
Oh yeah.
Yeah.
That's
now
solid.
170.
I was thinking after this live session, should we just increase the price to a little bit, maybe 30 a month?
Yep.
Let's do it.
Yeah. So you got 28 minutes to join at 27 a month, and you're locked in forever.
Love it. I mean, even $30 a month is the deal of a lifetime, other than exchanging fake illusionary units called dollars in for sats. That's the deal of a lifetime, but this would be right up there as second place.
Yep.
So there you go. 27 minutes you got.
27 minutes.
Who will take advantage of it? We've done their super chat here, though, boys, from Nav. Is this the same Nav who's always super chatting us?
Different at.
Yeah. I think it's the same guy, though.
It's got
Might be the same guy.
I actually, I think I met Nav in Vegas.
Oh, nice.
Pretty sure I met him at a steakhouse, or what's that place called? Brazilian steakhouse? I don't know. Anyways, question is, want to do a multi-sig, but concerned about the software wallet like Sparrow or whatever. Can it be a point of failure? It would only be a point of failure if you fail to back up the XPub and the XPubs associated with the wallets that are in the multi-sig. So it wouldn't be a point of failure. Like if, let's say you set up a multi-sig on the laptop that you're watching this from right now, and something happened to your laptop, like it got hacked or got stolen, somebody broke in your house, your multi-sig, your Bitcoin's still fine. You need 2 out of 3 keys. So it has nothing to do with your laptop unless you set up all software wallets.
Mm-hmm.
But I'm guessing, is that the question? Want to do a multi-sig, but concerned about the software wallet like Sparrow. Yeah, we wouldn't really recommend using a software wallet as part of your multi-sig because that would be a point of failure for sure because it's connected to the internet. But if you're
I think
just using
that's what they're
Sparrow as
asking.
like your, what's that?
I think what you just said is what they're asking. If somebody could get into their wallet with Sparrow.
If you've set up the multi-sig with 3 hardware wallets, for instance, but you're using Sparrow as an interface, and this is where the terminology of wallets gets confusing, because you're just using that as an interface to be able to sign transactions with your multi-sig wallet, which is the 3 devices. And there is some information that you want to save that is also on the Sparrow, which is the XPubs, as George said. And you also want to save backups of your derivation path as well, which is the sequence of multi-sig of signing, and the connection of those XPubs to those wallets. That's my understanding of it.
Yep.
Yeah.
It's sorry, Jack, go ahead.
I was gonna say, I think one of the issues could be that if, let's say, you have Sparrow on your phone or no, sorry, on your computer, and somebody gets access to that computer, they could see how much Bitcoin you have, but they can't move it.
Right.
And you could protect that with a password on Sparrow. You can add a password to your wallet on Sparrow, and then nobody can, if they open up your computer, they have to know your password for that to be able to view it. But yeah, they could view your Bitcoin if you didn't have that, but they can't use it. They can't send it anywhere because they don't have the private key, which is stored on all your devices.
Yeah.
I've actually, in my my years of advising people and helping people set up their hardware wallets, I've been kind of on the side of telling people not to use a password on their laptop, but I'm kind of switching my mind on that.
Password on the laptop is a good idea.
No, sorry, on the Sparrow wallet on the laptop.
Yeah.
Why? What was your reasoning behind that?
Well, the reason is because if somebody gets access to your XPub, like let's say you had a cold card connected to your Sparrow, if somebody got access to your XPub or even just like all the balances, like they can see everything. But even if, let's say that somebody got access to your laptop somehow and they could look at your Sparrow, even though they can't move your Bitcoin, if they had your XPub, they could essentially see all the wallets that are associated with that XPub, which is kind of a privacy concern. So
yeah,
I think the risk of it is pretty low in terms of something like that happening. But there's no risk at all to setting up a password on there, because even if you forget your password, you can just re-import it if you needed to, or create a new wallet with your re-export the keys from cold card.
I was going to ask, what's the reasoning for not having a password? You said that before you recommended
Just
not having one.
convenience.
Just convenience. Okay.
Yeah.
Yeah, I would say the other reason, for convenience, because if you have a password already on your laptop, then or on your computer, then all you need to do is put your computer to sleep to protect it.
Yeah.
As well,
True.
in that same way. And then it's less things to remember. But yeah, as you said, there's no real risk if you've done your backups properly.
Right.
Because you can always just uninstall it and reinstall it and set it up again.
Yeah.
But you don't want anybody to see that you have a certain amount of Bitcoin.
Right.
So you should have a password. That's what I would say. I mean, that's my thought.
Yeah, and again, my thought with that is that your computer should be password protected, and that's what protects it from anybody seeing it.
Yeah.
It's just one of those things, right? Like to me, a password on Sparrow would just kind of be an extra layer of security at really no risk, other than, if you forget your password, which I have, which is why I tell people not to use a password anymore, because it's a pain in the ass. Have enough passwords to keep track of.
Yeah.
But I do think it's kind of an extra layer of security that has zero risk to your Bitcoin. So I'm still kind of making my mind up about it, just kind of talking through it with you guys.
Yeah.
By the way, I just want to mention 2 people just joined the community.
Let's go.
The Maple one?
Yep.
See you in the happy hour then.
Smart people.
Yep.
Nav had a follow-up question here. He said, what if Sparrow is corrupted to begin with, is what he was meaning.
Oh, well, it still doesn't matter.
Oh, he said mobile Sparrow. There's no mobile Sparrow.
No, don't be using a mobile Sparrow, because that's how people got their Bitcoin swiped, a fake wallet, essentially.
It was like 7 Bitcoin or something got stolen. 7.4 Bitcoin.
I actually didn't follow that story too much, but it must have not been protected by a hardware wallet.
No,
mu-
he sent his Bitcoin to Sparrow on his phone. So I think he had it on a hot wallet.
It was a fake wallet. It was
Yeah.
like
It must
a
have been a
trap.
hot wallet. It must have been a hot wallet though.
It
yeah, it
was.
was on his phone.
So
mobile,
it wasn't
yeah.
even a hot wallet. It was just an interface from somebody who just made a scam app.
Right, but how
He
did
put
they
in his
get
private keys.
yeah, exactly. So that's what I'm curious about is how do you get the private keys? Because even if you were to try to set up, say you download on your desktop, it's not mobile, you download the wrong Sparrow and it's a scam app, and you set
Yeah.
up a multi-sig, how would they steal your Bitcoin if your seed phrases never interact with that interface? If they're
I think they put
all
their
stored
seed
on the
phrase into
hardware
the
wallets.
mobile.
Right.
Yeah.
Yeah, I understand that. I'm
Oh
saying
yeah.
so what Nav is afraid of is if he does everything right and it's not a software wallet and he does have a multi-sig hardware wallet set up, but he's using the wrong Sparrow app.
Really
He
sad.
couldn't get scammed there. He couldn't get his Bitcoin stolen because he's not inputting his private keys anywhere.
Right. He basically, if he had all of his information backed up properly, he could recreate that multi-sig in a different wallet.
Yeah.
Right. Whether it's Nunchuck or, Sparrow gets patched, whatever it is. Like, is that the scenario we're going with here? Is it like something's happened to Sparrow?
Yeah, I think that's what his question
Yeah.
was. Yeah.
So in
the
that case,
software
you could
itself is
essentially
corrupted.
just take the inputs there, take all the data that you are supposed to have to restore it and put it into a different wallet. Then you would still have you would essentially recreate the multi-sig, and then you would use the same keys that you had before to move Bitcoin out of there.
Yeah. So if your hardware, if your seed phrases never go online, then you're at no risk, even
Right.
if you download the wrong app.
Right.
I think the problem here was that maybe Nav thinks that you enter your seed phrase into Sparrow. You don't.
Oh yeah. Good
If
point.
you have a cold card, for example, you use a micro SD card, and then that micro SD card basically confirms the transaction on your cold card, and then you put that confirmed transaction on the SD card. Then you move that to your Sparrow.
Yes. And that transaction doesn't store your seed phrases. It's
No.
just verified on your cold card, which just stays offline. Yeah.
Yeah.
So Russell has the whole story about Bitcoin Jimmy. He thought he was importing his seed phrases, or he thought that importing the seed phrases into the fake app was how you exported the wallet. So he was basically creating what he thought was a watch only wallet, but instead of using his XPub or his public key, he used his private key to do so.
Mm.
Terrible.
And then Bitcoin was gone 30 seconds later.
Yeah. So don't do that. Don't enter your hardware wallet seed phrase into a software wallet ever.
Yeah.
Just basically ever. You don't
And
ever need to do
Sparrow
that.
isn't on your phone. It's not available as a mobile app. So you have to remember that.
Yeah.
That's what he did. He put it into a mobile app.
Yeah. And if you're going to use a mobile app to do this, try Nunchuck. Nunchuck is great.
Yep. Agreed. That's it for super chats today. Hey.
Mhm.
I don't know if I have time to go. I mean, I might as well. I just want to kind of bring this up because we were talking about Bitcoin as collateral, and I just wanted to walk through kind of an example that I see as kind of being a big trend here in the future in the coming years, and just to kind of get people thinking about it. So I'm going to bring up this little spreadsheet I created before the show. How do I get it up here now? There she is. So this is essentially Bitcoin is part of a mortgage. This is kind of the spreadsheet here. So if I open this up, there we go. So I did my best to kind of prepare this so I wasn't doing calculations live on the show today. But this is essentially like your traditional mortgage, right? If somebody wanted to buy a house, they'd go down to the bank, they'd need a down payment, say $50,000, which then they get a mortgage for $450,000. And the house, of course, is worth $500,000 at that point. The other option here is you could actually, instead of putting that towards a down payment, and this might actually happen on behalf of the banks, they might actually do this for you in the future. But instead of putting that $50,000 into a down payment where it's essentially just more units that they can create out of nothing, which doesn't really mean a whole lot to them, they're going to add Bitcoin to the mortgage. And so it's the same kind of equation here. You got $50,000 that you put into your down payment now goes into Bitcoin instead. Loan's the same. The house value is the same. And then after 10 years, this is where it starts to make a little bit of sense. So the first scenario here that I used was 50% compound annual growth rate. So you can see the numbers here after 1 year, 2 years, 10 years. That's what it's worth based on 50% CAGR, which many people would say is high. But I did a couple different scenarios here. So this is what it looks like after 10 years. You got your initial down payment there. The loan is now probably paid down to about 250,000. This is just an estimate. I didn't run the actual math on that, but from 450 down to 250, you've paid off a decent chunk of it. And your house probably increased because they're printing more money every day. So your house is now worth 600K. So this is the traditional route. That's kind of what it looks like. Whereas if you had that Bitcoin instead of a down payment, you have $2.8 million worth of Bitcoin on that mortgage now, right? And so your loan is the same, $250,000. Your house is worth the same, but you can see the big difference here in the net equity at the bottom. So the traditional route, you'd have about $400,000 worth of net equity. And in the mortgage, Bitcoin-backed mortgage, again, at 50% CAGR, you got net equity of 3.233 million. So from a banker's perspective, this makes a ton of sense. Obviously, their whole risk management is based on the net equity here. And then if we go down a little bit, use the 20% CAGR, which I think that's, most people would say that that's a little bit more reasonable or conservative. I would probably lean towards more 50 myself, but my opinion doesn't matter too much. Anyways, the point is, again, even at 20% CAGR after 10 years, this is kind of the difference there. Net equity being 400,000, the traditional route, versus 659,000 net equity, just with $50,000 worth of Bitcoin attached to that mortgage there. But the other part too here that's interesting is that even if Bitcoin dies, scenario 3 here, I got these wrong, but that's okay. Bitcoin dies. Traditional route, you got $400,000 worth of net equity, and Bitcoin goes to zero, you have $350,000 worth of net equity. So it's one of those things kind of we were talking about before, where it's like the upside is tremendous and the downside isn't really that much of a downside when you start using Bitcoin in these different ways. What do you guys think about that?
I have only one concern. I think your equity with the house would actually be lower because you wouldn't have paid off that much of the mortgage, would you?
Sorry, for which part?
So you have you have on the left side, you have the house.
Yep.
The loan for the house. I think your loan would still be a lot higher than 250K. So
No,
you'd still owe more.
It shouldn't be. I guess unless you sold some of the Bitcoin to pay down your loan. Is that what you're saying?
No, so you have a house and then you get a mortgage against it, right?
Yep.
In the beginning of your mortgage, you're mostly paying interest only.
Right.
So your house would have appreciated, but your mortgage wouldn't have dropped that much. So your equity would actually be a lot lower.
Yeah, true. But it would be the same over here. Like, so you're saying that this owing would be like more like 300,000 or something, or 350 maybe?
So it would be, so I just did the calculation. It would be 376.
Okay.
So your equity in actually what you showed here, your equity with Bitcoin would be way higher as a percentage because your equity with the house.
Ones, yeah.
So your equity with the house would be like 125K, meaning that your Bitcoin equity would be, 274K. So your Bitcoin equity in terms of, let's say, a multiple would be way, way higher in terms of percentages. Yeah. So you'd be way better off with Bitcoin.
Yeah, that's a good point. Yeah, I just kind of used a rough number there that I thought would be paid down. Yeah. Good point, though. So from a bank's perspective, like, it makes total sense. There's so much. Imagine if for the next 10 years, Bitcoin did return 50%. And it's not out of the question because that's what's happened the last 10 years, right? It's even higher than that probably. So that's a pretty big difference of just like a net equity of 400K, which in my opinion is still kind of fake equity there because the house probably isn't actually worth $600,000 in real terms. But look at that. Like, that's just, it's staggering almost. And so from a bank's perspective, the other nice thing about it too is, like, let's say that you pay this $50,000 down payment, that just kind of gets mixed into the fiat, illusion there. Of course, it brings up their reserve, which is what banks want. But at the same time, for people, especially in the turbulence that we're heading into now, there's going to be a lot of loan payments that are missed. I feel like, whether it's AI replacing jobs, whatever that may be. And so kind of the consideration I had here is that Bitcoin's extremely liquid. So if you did get into a situation where you lost your job or you got sick or whatever that is, and you couldn't make your mortgage payments for a couple months, what does the bank do? They have $50,000 worth of Bitcoin sitting there that they could just sell like a fraction of it to pay off your mortgage for the month.
Mhm.
Like, it just makes way more sense to me like that.
You can't sell a brick in a house. You can't sell a bedroom.
Window, exactly.
And then I was actually talking about this before. These loans are probably way safer for the bank.
Yeah,
compared to a real
100%.
estate loan. Like what you said there, extremely liquid. Your Bitcoin is extremely liquid. That's huge. That's a really
It's-
great example, Jor.
Yeah, it's massive. Yeah, this is. I mean, Bitcoin's going to work its way in. Like this is to make mortgages basically safer for the lender. But it's also going to work its way into everything because that's not specific to mortgages. That's Bitcoin. Like Bitcoin has an incredible Sharpe ratio, right? The returns, which the Sharpe ratio measures like the returns compared to its volatility. So even though it's incredibly volatile, it still has massive returns. So every portfolio needs to have something like Bitcoin, which has an incredibly good Sharpe ratio. And that's the case for loans as well. Any asset like this. Bonds could be built this way. Mortgages, like everything could have a little bit of Bitcoin in it, and it would reduce the risk like crazy.
And supercharge it.
Yeah. Yeah, exactly. And I don't know. It's very like you talked about that scenario of like missing a mortgage payment, right? It's like even though you've built up equity in the home by making previous mortgage payments, they make it very difficult to like unlock that from it. Whereas if you had that Bitcoin sitting there and it's just a specific SAT amount, but the dollar amount has grown, it's pretty easy for the bank to just like, well, you're now like your down payment or whatever is of Bitcoin, that Bitcoin amount, initial Bitcoin amount, it's grown so much beyond the ratio that was initially there, the 10% down or the 5% down or whatever it ends up being. It's way higher than that compared to the value of the home. So they could reduce that without having to be like, oh, we're now reducing it below the minimum threshold that you initially invested because it's grown so much.
I think the main issue I foresee with this is, number one, banks are very slow to do anything. But the other thing too, and most banks probably think that Bitcoin is, still in the Ponzi scheme phase. But the other thing too is like banks thrive off of people taking on a 30-year mortgage and extending it to 40 and then 50 and then 60. So they're constantly for their entire life paying interest to the bank. Whereas something like this, if we use that same example, you could essentially pay off your mortgage in 10 years with that. And then what happens from the bank's perspective is, yes, I mean, it's better on there and from a risk perspective, but from a revenue perspective, that makes the bank obsolete after 10 years. And I don't think many banks will be into that. So they'll probably find a way to like either increase the rates if you have Bitcoin or something like that to kind of, get back at the customer. But it just makes sense. And I do think that this is going to be a massive part of the financial system in the future. And if you consider that, let's say that a couple banks start adopting this, and then we have some data showing like real life results of this happening. And then what's going to happen with that, I think, would be every single mortgage that gets taken on forever has a Bitcoin component to it, which is a huge, huge driver of demand for Bitcoin. And it's like almost like the MicroStrategy kind of flywheel effect, where if everybody's adding Bitcoin to the mortgage, that increases the value of the Bitcoin because the demand side's so high, which actually makes this proposition even more valuable.
It's kind of funny how what's good for the individual, which would be to have a Bitcoin component to their loan to be able to pay it off sooner, is bad for the banks. It's actually bad for the banks. The banks want as much loans as possible as they can possibly do. It's why the Fed reduced the fractional reserve. There's no fractional reserve lending requirements anymore. They can lend out as much money as they want, regardless of how much capital the bank has in the States. And they literally create the money to buy the house in this mortgage scenario out of thin air, cost them nothing. They need no reserves to do so. And then they earn interest on that money that they printed for nothing that you are paying them. And if you paid that off sooner, they don't get that money for nothing anymore. So they don't want that. They want you to stay locked into a mortgage for as long as possible. They want you to refinance. They want you to take out a home equity line of credit. And these things might be good as well for you as an individual, because you can arbitrage, as we talked about for the first whole portion of this, and you can arbitrage by buying Bitcoin. But essentially, the bank wants you to be in debt to them, because it is no cost to them to have that, and it only benefits them. It's totally nuts. It's totally nuts. And there is risk to it, but as we've seen in the past, if these loans blow up too much, right, and the bank starts seeing that happen, they'll just get bailed out.
Yeah.
So the incentives are totally aligned for them to take as much risk as possible, and not to have any reserves, right? Just lend everything out, print it all out of thin air, and earn the interest from you.
Yeah, and I think it's important to just kind of understand where we are right now. And I think that for the next couple of decades, there's going to be a lot of, conflicting views versus, the customer versus the bank. What's, who's benefiting from it. There's going to be a bunch of misunderstanding, a bunch of new companies, a bunch of new options. But it's important to note that these systems are not designed to go hand in hand. If we zoom out 50 years from now, it won't be fiat and Bitcoin still around. It's going to be one or the other. Right. And so I think for the next couple of decades, it's going to be two paths and people trying things and going over here and then back over here. But eventually these two systems cannot cooperate forever. Eventually one will kill the other. And I think the three of us would agree that Bitcoin is going to be the one ahead at the end of it. But there's going to be a bunch of, different things, different options for people. And it's just kind of interesting where we are right now.
Yeah. Fiat's pretty weak. Like the arguments against fiat are very strong. And the arguments for Bitcoin are very strong. So fiat's losing that battle. That's damn sure.
Yes. The world just hasn't caught up yet. That's it.
Right.
Yeah. So on the screen there, you can see that's a QR code. If you're watching on the computer, you can scan that with your phone. You can also check out this link that we're all going to post here in our chats. This is for our Skool community. And you may have seen the warnings. We talked about it earlier. After today, I guess we're going to be raising the price. So
at 3:30.
At 3:30, we're going to raise the price. So you can lock in your price today by signing up, and you actually get a 7-day free trial. So you can lock in the current rate, try it out for 7 days. If you don't like it, you can cancel anyway.
Kind of goes well with everything we talked about today in the sense of tremendous upside, very minimal risk.
Yeah.
That's the kind of stuff you want to look for in life. So yes, we're going to head over there right now. And big shout out to everybody for showing up today for another Friday stream. It's good to have all the boys back today. Shout out to Nav for the super chats. Shout out to everybody over on Noster who sent the boys some sats. Josh with the biggest zap of the day. I was trying to think of this before the show, boys. We should almost have like a shout out at the end of the show for the biggest zap during the show. I was trying to think of like maple something, but I couldn't find a good word after that. So try to spend the next week thinking about of what we could crown the biggest zap of the show, what we could call them and highlight them at the end.
The Maple King.
Maple King's a good one. That was actually one of the first things that popped into my mind. Or maple, I don't know. Think about it. You got a week and 2 minutes.
I like it.
Beaver sats. Beaver. Yeah, we'll think of something. But anyways, thanks everybody for the support. We hope you join us over in the Skool for the happy hour. I'm sure it'll be a good one as usual there today. The zappiest Maple King of them all. That's right. And today that is Josh. So unfortunately, or not Josh. Yeah, Josh. There's too many Joshes here chatting. Joshua is the Maple King for today, almost like the Hay King from The Office. So shout out to Josh and shout out to everybody who supporting us. We very much appreciate it. It is our plan, our intention to continue doing this every Friday, continue doing it without sponsors. We think it's very important to maintain our own voices here. And so it's this kind of stuff, whether it's zaps, sats, or people joining the community and being part of it. That's what's powering Maple Bitcoin right now. So it's a mixture of that and, of course, maple syrup. So thanks, everybody. Have yourselves an amazing week. Join us over in school, or we'll see you next week. Thanks, fellas.